So today we're going to look at my UK stock market portfolio and see how it's doing. It's the first update on the YouTube channel since January 2022. So we're going to see what's happening here since that period of time. Now, just to let you know, I do more regular updates. They are on the Patreon, so I do a monthly update on the Patreon rather than every couple of months. I think the next time I'll do a portfolio review will be July time, so if you do want more regular updates, I do one every month on the Patreon, so if you want to join that, link is in the description. There's also 2 or 3 exclusive videos a week on there and a Discord with 600 members on there. It is the highest Patreon to subscriber count on YouTube, which I'm very proud of, and I hopefully sums up the amount of effort that I do try to put in to that. It's not just one where there's a video once a week and that's it. I try and put quite a lot of effort into the Patreon as well. So if you do want to join that, link is in the description. And also, just on a side note, yesterday on the video that I did, which was about Boohoo, so I asked you guys what video you want to see. The highest voted one was a video on Boohoo, so I did is Boohoo stock and buy. I asked in that video, what do you guys want to see next? What particular stock do you want to see me talk about? And I'll be honest with you, I was a little bit disappointed. There wasn't many votes. Like, the highest vote that we had was this one here that got 5 votes, which was from JSIS, which said he wanted to see T-Doc, DraftKings and Gang. Now, the problem with that is I don't know which one those 5 votes are for. Is it for T-Doc? Is it for DraftKings? Is it for Gang? So I'm not sure which stock you want to see there, guys. So yeah, let me know which stock it is, because then I can make a video on it. There weren't too many votes, and the one that had the most votes, there was 3 stocks there, so I don't know which one in particular you wanted to see there. So let me know, and then I can make a video on that one. But getting stuck onto the UK stock market portfolio review, the first since January 2022 on the YouTube channel. And since then, I'm sure you guys are pretty much aware, there's been a lot of pressure on the markets, a lot of tensions with what's going on in Ukraine and Russia since then. And if we just look at the FTSE 250, since about the 5th of January, that saw it decline 19%, but it is starting to put a bit of a recovery in. Same thing's actually happening with my account, with this portfolio, which you won't really see unless you see the monthly updates. But we are having a bit of a bounce, but nowhere near where we were in January at the start of the year, and that will be very clear when we go through it. So that's if you want to compare it to where we're at right now. But we'll have a look at my portfolio. So starting at the top, Airtel Africa, in my opinion, one of, if not the best UK dividend stock out there. It gives you a lot of share price appreciation because it has a lot of growth. It's growing at really good rates, and as well as that, it has a lot of room to hike that dividend and pays a good dividend. I think I get like something like a 5-6% dividend yield off that. It's probably actually a little bit higher than that, but I think at the moment it pays something like a 5% dividend yield. It actually pays a 2.3% dividend yield, but I'm up 100%, so I think I get somewhere like a 5-6% dividend yield off that. Still down at 12 times earnings, which is incredibly cheap for this company. Fantastic company. A stock that I should have potentially made a little bit bigger than what I did do. The only reason why I didn't is because it's a stock that operates in Africa, and just with that risk of it being a different international company and operating, I just wasn't aware if there was anything that could affect it, and that's probably why I didn't make it bigger than what it was. But saying that, it's a great company with great growth, good valuation, still pays a very good dividend yield. You know, I get a 5-6% dividend yield on that, so yeah, great position that I have there. ASOS down 40% on this one. I've not bought this for a long time. I think the reason why is I've been focusing on Boohoo a lot, which I'll talk about in a second. So yeah, looking back at it now, ASOS probably wasn't the best fit for my portfolio because I already have JD Sports, Boohoo, and ASOS, 3 clothing companies in here. However, at the time, it did seem a very good opportunity because JD Sports was up a fair amount, and even Boohoo was doing quite well. So yeah, I just one of those positions that I'm not really prioritizing at the moment. I think there's better opportunities out there to buy, so I'm just holding that one in there at the moment. We've got Barrett Developments here, this is slowly getting a little bit bigger. It's currently up 2% at the moment. Now, if we do go back to my US portfolio in January 2022, you'll see that Barrett Developments was up 41%. So this has had a major pullback in the last few months. A lot of that, I think, is the pressure with the Ukraine-Russia situation. I think interest rates are going up and people worried that the housing market is going to slow down. Logistic issues going up as well. So that will affect, obviously, the margins on Barrett Developments and house builders in general. I think the housing market is still very strong. From what I can see, everything is going very well. There's still a lot of demand out there. And I think that, yeah, there's such a shortage of housing that I think that a lot of house builders will do well. So I'm looking at Barrett Developments and maybe making that a bit of a bigger position. I've been even looking at other house builders to add into the portfolio. But I think Barrett Developments will give me a good amount of share price appreciation. And as well as that, I think I'll get a good dividend yield off it. And I just had a quick look now. So it's trading down at a P/E ratio of 8, which is very cheap. And also 6% dividend yield off it, which is really good. So yeah, I think this will give me, it's actually having a bit of a pop today as recording this video, but it would actually be a good valuation, very good dividend yield. So yeah, Barrett Developments is one that I am thinking about making a lot bigger, just because I think I'll get a lot of share price appreciation of it, and it'd be a lovely dividend stock to have in this portfolio. So that's one of my priorities that I could potentially be buying in this next month for sure. Then we have Boohoo. You can see this makes up a lot of the portfolio up. It's currently my largest position in the portfolio. The reason why is because it's the one that I see more upside on, and with the ones that I think have the biggest potential, I'm going to bet bigger on them. So that is why that's happening with Boohoo. It is quite a big position. When this starts moving in the right direction, I will have to trim this quite a fair bit. So I think my average at the moment is somewhere around about the £1.40ish, I think, at the moment. As soon as this kind of gets like £1.40, I'd probably trim it break even, but only like a little bit, and then probably from there, every time it would go up, probably to, you know, £1.80 to £2.20. £2.60, I'll probably just take a lot more profit off the table, and I'd probably trim that down to a position that's very similar to probably S4 Capital, and I'll be trimming that on the way up, and then there'll be a part of it that I will hold for the longer term then, you know, for the 5-year period. But at the moment, while it's down at these top prices, I'm just averaging down, building that position up, and then I'll correct it on the way up. I think Boohoo at the moment is just incredibly cheap. Like, it should not be, even if you're taking the stays down at 3% profit margins. You know, I talked about this yesterday, and it grows at 10%, it's still undervalued, and I don't even think it's going to stay down at this profit margin and this revenue growth. I think it'll go back to 20% revenue growth, and I think it'll go back to 5% profit margins, and then when you have that situation play out, this stock is going to, you know, 3x to 5x in my opinion. So that's why it's my biggest position. So yeah, I'm happy with that one there. We've got Best of Best down 67%. I'm kind of holding that one at the moment. I'm seeing where the financials go in the next kind of 12 months, and then I'll decide from there what I'm going to do, maybe if I'm going to buy any more. I still believe that even though the share price is down a massive amount, I still think that this could get to break even if it does very well. And the dividend side of it, it's quite a bit of a profit beast, and it will carry on hiking that dividend up. So I think that over the longer period of time, I can still probably make money out of this position even though it's down. I just need to make sure the financials keep moving in the right direction on that one. So yeah, I'm just holding that one away there. We've got K-Box, which is down 37%. This, I mean, what was this up? Let's have a look what it was doing. So it was actually up 10% 3 months ago. So this has had a massive fall off. The reason why is because some account issues. Basically, it came out that they did their accounts wrong. They got the stock, the stock they were holding incorrect, which isn't a big deal. It's one of those that it shouldn't happen, but it's not something like getting the profit wrong or the revenue wrong. Since then, they've had a bit of a change around. They've got the CFO out, and at the moment, I think the K-Box is a really good value on the UK stock market. If you just look down here, at the moment, it's currently trading down at 14 times earnings, which I think is very good for a company that's growing high single-digit revenue, high single-digit profit growth. Pays out a 3.35% dividend yield as well, so it's a lovely dividend stock here. So yeah, I mean, you could count it as a growth stock potentially because it has a lot of growth here. You could count it as a value play because it's a decent valuations. You could count it as a dividend play. It's kind of like the triple threat is K-Box. So yeah, at the moment, I'm a big fan of K-Box. If I can get my average down a little bit more on that one, I'd be happy to do that. It's one that I could potentially buy a bit more of at the moment. Card Factory, flat on that one, not up, not down. Card Factory at the moment is in a strange place because the company is doing all the right things. The revenue is starting to come back, the profit is starting to come back, and if it carries on moving in the right direction, I mean, next year, when we're at this time next year, this is going to be trading down like a price to earnings of like 6 or something. So I'm not sure when people are going to wake up and realise that Card Factory, and this is Cake Factory, Card Factory, when Card Factory is actually starting to move really much in the right direction here. So yeah, I thought it'd be a lot higher than where it is right now. I'm really surprised to see it still flat down here. It's one that I could potentially buy because at the moment, as the profit and revenue keeps raking up, that risk of bankruptcy, I'm playing it as a bit of it's the highest risk in my portfolio for sure. And that bankruptcy risk is starting to go away from it the more it starts, you know, ranking up this profit and revenue growth. Yeah, I could potentially buy a bit more of it. We'll see what happens there. I just need, same again, I'm waiting for the bit more of the financial development on that one. I'm waiting for some more financial reports of that one, which I think is out very soon. Just had a quick look, it's actually out on the 3rd of May, so I'll have a lot more of a better idea when I start buying that one, probably around the 3rd of May for Card Factory. Next up, Jet 2. So yeah, I'm looking forward to Jet 2. It's probably going to have its first decent summer for like 2 years, which is going to be really good. It's up 52%. I think probably by the time that we're here at the end of, if we're here at the same time next year, and they have a decent summer, I don't think that'll be at 52% up. I think that'll be a triple digit return for sure. Greggs had a bit of a pullback. I mean, if we look here, I mean, it was up 111% last time I did this video. It's up 70% now, but I have sold off half my position in Greggs. I did clock in over 100% return on that one, taking half my profit off the table. The rest I'm carrying on holding at the moment. I don't think it'll be probably the best performer in this portfolio at the moment because it is a lot higher valuation than the other ones, but still will pay me a very good dividend, and we'll see where that one goes. I'm waiting to see how the new management team perform when Roger Whiteside leaves on that one. Hollywood Bowl, I'm not sure why this is actually coming up with the incorrect percentage. I'm up currently 55% on that one, not 29%. Not sure why that's happening. But yeah, Hollywood Bowl, I'm thinking about potentially buying a little bit more of. We'll see what happens. Fantastic company. Could easily be my biggest position. So yeah, we'll keep an eye on Hollywood Bowl. But yeah, that is it should potentially be a bit of a bigger position than what it is right now. But yeah, it's a great company. That is definitely. I'm currently 2 years I think into holding that one, and I've got actually no plans to sell it. All I think about is potentially buying more of it, more than anything. So yeah, I'm not sure why that's incorrect. But getting on to the next one, which is Hotel Chocolate, up 13% on that one. Should probably be a little bit higher than where it is right now. It should be up a lot more considering how good the financials have been. So happy to hold Hotel Chocolate. No plans to sell, no plans to buy. JD Sports, this has had a massive pullback. I mean, what were we? So we were up 100% last time we did this portfolio review. Now up 29%. Yeah, it's had a major pullback, way too much of a pullback. One that I'm thinking about potentially buying a little bit of the dip on. The only problem is like I said, a bit like an ASOS situation, I'm kind of prioritising it, Boohoo at the moment. But maybe one that I carry on buying a bit more of. Legal and General, currently up 29% on that one. This is a great stock, obviously gives you good share price appreciation, but it's a lovely dividend stock as well. National Express, that's very much like a Jet2 situation, coming into the first summer period for it that it's had for a very, very long time. I think that will once again be up over 100% by the time we get around to this video next year. S4 Capital down 25% on this one. It's been a bit of an awful couple of months for S4 Capital. It's been caught up in the growth stock sell-off, and then it started to put a bit of a rebound in, and then it came out that S4 Capital had their results delayed by the auditor. That's basically meant that everyone's gone, okay, that company's frauding numbers, and it's basically being sold off like it's frauding numbers, even though we've got no confirmation of what's actually going on inside the company. Just speculation has taken over that stock. So I am buying that one at the moment, my second largest position at the moment. So yeah, I will continue. That's a high up priority. And then we've got 88 Casinos, up 40% on that one. Just really got no plans to buy that one, even though that one has had a massive pullback as well. You can see this was up 100% last time. It's now up 40%. That's had a massive pullback, but no plans to buy that one. I'm kind of a bit unsure on that one at the moment, so I'm just watching that one from the sidelines. So overall, yeah, I'm very happy with the portfolio. It's all going very well. Obviously, not including the profit that we're taking off the table. There's some good stocks up a good amount off at the moment. ASOS, like I said, that's the only one that I've not really got plans for. Barrett Developments could have come a good priority to buy this month. Boohoo I'll probably be buying at some point. Cake Box I'll probably buy at some point. Card Factory potentially after May time will be one. And S4 Capital as well will be probably a very high priority as well going forward. But yeah, that's the UK portfolio. Happy with how everything's going, guys. And yeah, hope you enjoyed the update. Like I said before, I'll update you again on the YouTube channel around July time if you do want more regular updates. But before then, make sure you join Patreon. That's where I do an update every month on how the portfolio is going. But yeah, that's how it's all going. Hope you enjoyed it. Hope you enjoyed me sharing this portfolio with you. Just keeping all that transparency. It's a series that I've run for a very long time on the channel, and you can just see how everything's ticking along nicely. Especially in this time at the moment where stocks are down a huge amount. You don't see many YouTubers now sharing the portfolio. In fact, you still don't see many of them actually posting, but you don't see that much transparency. You see the transparency in the bull market, you don't see it so much in the bear market, and after a major pullback, I'm still here sharing this portfolio with you guys, so hope you enjoy it, and yeah, catch you in a bit.